In this video, we're going to talk about something that seems way more complicated than it really is, the classified balance sheet. Welcome to Accounting How To. I'm your host, Carolyn Grimm. That is my sidekick, Terrence. We're here to put the fun in accounting fundamentals. Now, when I told Terrence we were going to be talking about classified balance sheets today, he thought he was getting some sort of new security clearance. It's not that kind of classified. So let's jump into a balance sheet and I will show you exactly what a classified balance sheet is all about. So here we are inside of the fictitious records of the fictitious company called Terrence Inc. And what we're looking at is a balance sheet. You can see your assets, you can see your liabilities, and your equity. This is like a balance sheet you could write on the back of a napkin while you're sitting down at the pub. But let's start to look into this a little bit. So when we click on this liabilities and equity section here, now you can see that we have assets and we have our liabilities and our equity. Well, within those categories, we have a bunch of classifications. So let's take a look at our assets. So under our assets, we have current assets, fixed assets, other assets, and total assets. Now we've just done a classified balance sheet. We've added some detail to it. We've got some balances in those asset accounts that tell us some stuff. So this is giving us the total of each of those categories of assets, the classifications of assets. If we click on the liability arrow, we've got current liabilities, we've got long-term liabilities. So we have classified those liabilities. And under the equity account, we're going to see things like retained earnings and Terrence T-Rex capital and our net income coming through from our income statement. So all this is doing is giving us some classifications that we can use in order to do some cool stuff. So if we look at our current assets section, now we can see that we've got cash, we've got accounts receivable, we've got merchandise inventory. Under our fixed assets, we've got a delivery van, we've got accumulated depreciation on that delivery van, and under the other assets section, we've got trademarks and accumulated amortization on those trademarks. And then under the liability section, we've got the same idea going on. We've got current liabilities, accounts payable, and other current liabilities. And then we've got long-term liabilities, and this one happens to be a note payable. So why would we want to do this on a balance sheet? Well, first of all, accountants like to be very organized, and this helps us to stay organized. We love that. But more importantly, what it allows us to do is to take a quick look at a balance sheet for any company and get some ideas of what's going on with that company very quickly. And this is a jumping off point for us to do a lot of financial analysis. So let's talk about, for example, current assets and current liabilities. So we have current assets of $74,000 and we have current liabilities of $6,700. Now, when we're talking about current assets, we're talking about things that are cash or can be turned into cash fairly easily. So examples of current assets we already saw: cash, accounts receivable, inventory. So cash is already cash, accounts receivable will turn into cash as our customers pay us, and our inventory will turn into cash as we sell it to our customers. Now, those current assets are what we have available to pay our current liabilities. Our current liabilities are anything that's due within one operating cycle. So in a business, an operating cycle is generally 12 months. So from whatever the date is today, 12 months ahead, that is our current operating cycle. So what we want to look at here is, do we have enough in our current assets to cover our current liabilities, those payments that are going to be due over the next 12 months? So in this case, we can very easily see that we've got $6,700 in current liabilities, and we've got $74,000 in current assets. So we have plenty of money or almost money that we can use to pay our accounts payable and other current liabilities. So all that a classified balance sheet is doing is it's giving us clumps of information that we can look at very easily and take those pieces of information and then use them for doing financial statement analysis. That's all it is. It's another one of those things that when you see it in an accounting book like this, it seems like it's going to be really complicated. But when you break it down, it really isn't. Until next time, stay balanced, my friends.